Good afternoon, traders. It is Sunday, the 15th of March, and that means it's Mother's Day here in the UK. So if you're in the small 2% of women who are watching my videos and you're a mother, then happy Mother's Day to you, and thanks for tuning in. I just wanted to jump on and do my usual market outlook, just run through the things that I am watching for my Darwin BYLL bill, and just discuss how a few of my trades went last week, because it was a pretty interesting week in the markets, pretty tumultuous, as you can imagine, with the war raging in Iran and all around the Middle East. Some pretty terrible scenes and a lot of confusion, I think, politically, which has meant the markets have also reflected that confusion and been quite choppy, which can be good. But for me, it's just been pretty neutral, because it's sort of given some and taken some. And I've taken a sort of slightly longer term approach by trading the 4-hour and the daily charts, as opposed to, the hourly charts, the 15-minute charts, which does mean that it sort of lessens that effect of like choppiness and noise in the markets, because you can sort of let things play out over a longer term and you're risking a bit less because you're taking fewer trades. So for me, not so bad. Let's go through some of my positions and how they've played out. As you can see, to start off with, we've got the US dollar and the Swiss franc. Now, if you're a fundamental trader, you will be saying that the Swiss franc is unbuyable at this point. Everyone's concerned that the SNB, the Swiss National Bank, might intervene and weaken the Swiss franc in terms of interest rates. I'm not sure what they're going to do. I'm just trading the chart, the setup that I got. The setup that I had was a short trade, which I covered in last week's market outlook. We were looking at this wedge here. It broke down through the wedge, which is perfect for us. We took I think we took a short trade here and got stopped out up here. That was the reaction to the war starting. And then it reached this level of support up here, this horizontal key level that you can see in the sort of burgundy color. It provided a bit of a bounce off that, which was perfect, because we saw that the moving averages were facing down. My MACD filter down here is telling me to take short positions. It's rejected off that, and then we got a nice bear candle, and I got in here. And it was moving nicely, moving very nicely, but then it got to the 100 MA and decided it was going to flip reverse, and the dollar basically started to get much stronger, which is what you would expect in this environment, because there's likely going to be an interest rate hike. Yeah, you would expect dollar strength. However, a lot of my trades were setting up for dollar weakness. And regardless, I'm just trading the setups. And you'll see why this sort of plays out in a minute, because I'm going to show you a few other charts where it's essentially hedged me. So anyway, this one has already been stopped out. So I've lost one of my US dollar Swiss franc positions. This was my shorter term stop loss here. And then we have this longer term stop loss, which perhaps is better viewed on the daily chart, which I positioned just above the 200 moving average. And the reason for that stop loss for me, in case you're interested, is just because I want to know for sure that I've got a position that has stayed in the trend if it's going to continue, that it's hit all these different levels, like it's broken through the 50, the 100, might be through a trend line or horizontal key level. And if it then breaks through the 200, it's almost like the last line of defense. And if I'm out of my position, I'm out of my position, and I know that the trend is either completely flat now or it's gone the other way. And so I'm happy for my trade to be over. So I'm still in one position on the US dollar Swiss in case it turns around. And if it doesn't, then so be it. That was my trade. Let's just, all of my positions contain US dollar. So we've got Aussie dollar, US dollar. This was a buy. So essentially we are looking at dollar weakness again. So we had the US dollar Swiss franc weakness, the Aussie dollar, US dollar buy weakness, expecting weakness for the dollar. And again, this started going the right way. It was looking really good. And I think I took profit on one of those trades. Let me just double check. Yes, I did. So I actually took profit on this first one here. As you can see, I will just go into the 4-hour chart now and just quickly have a look at that. Right. So you can see it a bit more clearly here. We got in of this candle that rejected the 200 MA, which is a nice level to reject. We're obviously looking for longs. When I got in here, it did start to go down, but then it came up and it went all the way back down again, and then it went whoosh and it hit my take profit. So that was a bit of a whipsaw. And after it had done that, we were just in this one more position here, and it's just coming all the way down. The last line of defense now will be this trend line coming up. If that provides a little bit of support, then great. And if not, then I'm out and I won't have lost anything, because this stop loss down here is equal to that take profit there. So, right, let's look at the US dollar CAD. This was a US dollar. This was a short trade. So again, trying to look at US dollar weakness, but didn't get it. It started going the right way and then whipped back against it, went past everything, stopped us out on one trade, and it looks like it's about to stop us out on another as well. So that's a shame, but that's the trade, that's the way it goes. And it's gone all the way through all the moving averages. It's gone through here. Although the MACD still looks like we should be taking shorts on the weekly. On the daily chart, that looks a bit weird, doesn't it? On the daily chart, I mean, for me, it's coming down here. I guess overall it's been going up. We're right at this point here now where it's just got so many key levels and moving averages all lining up and trend lines that who knows what's going to happen. That was the weekly chart, and this is the daily chart. So it looks like it's going to stop us out, but we'll see. So ultimately, we had one trade hit a take profit on the Aussie dollar, US dollar, and then whip back. We had the US dollar Swiss and the US dollar CAD whip back and go against us. Looks like we're going to be stopped out on both of those, but we're still in two of the trades, so we'll see. With a conservative position, a bigger stop loss. And then we've got cable. And so this is the only one where, so we were short, we got short signal on cable. MACD turned bearish on the weekly, and that means we're looking for dollar strength. So that just naturally occurred. I'm not hedging this intentionally. I did want a hedge. I did want another trade that was actually positive dollar, but I'm not sort of trying to make something fit. This was a really good setup for me. So we got the trend filter on the MACD for the weekly turn negative here. The moving averages start to point downwards. We got this nice little, what do you call it? Like a pin bar, I guess, bearish pin bar on the daily, coming off the 200 MA and also off this trend line that we've drawn down here. We've created it like a trend line zone rather than just a single trend line, because that is ultimately like what it is. It's an area that we're looking at. And I sort of do that by connecting the close and the highs, but it's an approximation. You get the idea. Anyway, it rejected it. And so a nice position to sort of look for a good risk reward setup. You can see it more clearly on the 4 hour, which was the actual entry. We got this bearish engulfing candle, and that we got in on that. Basically, we put one stop above the bearish engulfing candle and above the trend line, and the next stop above the 200 MA. It went down and it hit our first take profit. Beautiful. Moved our stop down and started to trail it down a little bit more. And then off this candle here, as it broke through this level that we had going across here, this candle broke it. We bought a bit more. We sold a bit more. So we got into another short trade here, and that started to go in a nice way to in the right direction too. Our stop losses are above this trend line, above the 100 MA, and we're just going to trail this down. And this is a nice one because this trade is essentially making up so far for the loss on the US dollar Swiss and the US dollar CAD. The Aussie dollar US dollar looks like it's breaking even, and if I can keep adding in at good spaces on this cable trade, this short, then that's going to give me profit for the month, hopefully. So I'm going to look for that. I'm going to give it enough space to really go down. And, I fully expect that it will whip back at some point. It's a pretty crazy market right now, and we can't really predict what's going to happen. So that's where I'm at with my positions that I'm currently holding and trading on Darwinex. The other market that I am looking at is the pound Japanese yen. And I'll just show you this chart here. Let's just go to the weekly chart to begin with. It's always a good place to start. It's recently turned red down here, meaning that we're looking for short trades now. Obviously, for a very long time, the pound has been surging, as has the US dollar against the yen. You can see the same on both charts. Pretty similar setups, to be honest. This looks like it's trying to roll over and go long again, whereas the pound looks like it's a bit weaker. So as we've seen with cable, the US dollar is beating the pound, and so it makes sense. And it stands to reason that the pound yen is a more is a clearer trade here because the pound is weaker than the US dollar. The US dollar yen looks similar, but it looks like it's more sort of ready to roll back over and go long again. So that's why I'm looking at the pound yen. It's a bit of an unusual pair to follow, but it's just one that I seem to trade quite a lot for some reason. And I think that just happens when you get used to trading a pair. You just sort of start to know its weird little ways. Anyway, this is the weekly chart, and it's come up against these. There's quite a few different levels, historically, key levels, where it could turn back around and come down. Right now, all of the moving averages on the weekly are facing up. And so these could be areas where if you took a short trade, you might want to take some profit. Let's look at the daily chart. Let's reset that. You can see a little bit more clearly now how things are starting to flatten out. The 50 is beginning to flatten out. We've had rejections off these key levels. We've started to connect these highs and these lows, and we're seeing a sort of wedge, which is, what happens when things consolidate and they start to form a little area of activity just waiting to happen. Like you can feel the energy like building up, ready for a breakout. So we're hoping that the breakout is to the downside so that we can get in on another short trade here. It's a nice clean chart. Right now, the moving averages are still facing up or flat. And so I'm not entering. This is something that I covered in a short earlier in the week, basically something which Charlie Burton sort of covered with me in one of those coaching sessions that I've been doing over on his channel, which if you haven't seen them, go and have a look. They're really good. Charlie's basically doing a sort of bi-weekly, or is that the right word? Fortnightly, I think is the right word. Coaching sessions with me and looking at the trades I'm taking, looking at my strategy, going over my psychology and the things that I perhaps struggle with or could improve upon. And one of those tips that he gave me is just when the moving averages are moving up or against where you're trading, it's more likely that they're going to provide areas of resistance where you could be taking profit. And so it's just one to be aware of getting into a trade when you're trading into them facing up as opposed to them flattened or down if you're shorting. So here we are on the 4 hour. You can see things a bit more clearly. They're all flattened, they're crossing over, they're wiggling around. And what we get here, something I look for called three's a crowd, where you've got 3 or more elements of your chart all clustered together. So we've got the 100, the 200, the 50 price, horizontal key levels. We've got a trend line. There's a lot of stuff going on. So you have to really carefully monitor to see what's going to happen. So I'm really looking at the pound yen. I'm looking for a breakout to the downside. I'm going to draw a very fancy chart here. I imagine it will do this, maybe get here, bosh, down, hopefully. Oops, I always forget that I've still got that on. And then, I will either be trying to target down here in this sort of area for a take profit, or alternatively, just sort of ride it all the way along this trend line and then use these moving averages and the trend line as ways to trail the stop and take profit at various points. So as you may have already picked up on, when I enter a trade, I enter in 2 positions. One would be targeting here to take profit, and then I'll be moving my stop loss down after that point. And 2 is just to take it for as long as I can ride the trend. So that's my game plan on the pound yen, and that's what I'm watching. Let's go to these ugly scribbles that I've just done. But hey, that's my analysis. I'm not going to go over the other forex pairs in this because I feel like there's enough activity there, and mainly we're looking at the US dollar, a little bit of pound action as well. So I'll finish by just having a quick look at the commodities and a quick look at the market itself. As we know, there have been a lot of divergences on the weekly chart for a long time. You can see that things are going down in terms of momentum on the MACD, yet the price has been moving up. It does suggest a slowdown at some point. On the daily chart of the S&P is, reaching this 200 MA stage. Now, that's always a key level. We could see a bounce and things could stabilize. I imagine we do see a slight bounce and we get a little bit of consolidation for a while. But if something crazy happens, it is possible that if we get a close underneath this 200 MA, then it might precipitate a larger fall. I would imagine in that instance, we would be falling down to this level here around 130. And depending on the severity and the reason for that impetus, the next area to, target would be all the way down here, just there, probably around 800. And now let's just hope that doesn't happen, because a lot of people's pensions and savings are going to be screwed if that's the case. This is I'm just hoping that things stabilize a bit here and then continue as normal. The FTSE is a very different picture for me. If I'd been trading US stocks, which thankfully I haven't been, I would have been out of the market since November, since the 7th of November last year. Whereas on the FTSE, I'd have actually been in the market up until the 6th of March. And that just goes to show you how good a tool the MACD is at sort of showing timing trends. And that's why I use the weekly MACD as my main overriding trend filter. I just find that it's the most accurate. It tends to really reflect what's going on with the price. I mean, if you look at this stage here, we'd be out of the market here. And all of that time in price in the US stocks, you'd have been down or flat. And that's just tying up your capital. Whereas in the UK market, it's kept me in pretty much all the way through until recently, where a lot of my positions are getting closed now because I've just moved all my stop losses up. But yeah, that's why I use the MACD on the weekly charts as a trend filter. It works really well. And yeah, the FTSE has been lagging in terms of poor performance. It's been doing better, but it has taken a bit of a shock recently, and I'm not sure how much it's dropped off, but it dropped off like good 8%, maybe a little bit less. So a bit of a nasty surprise last week for people in the UK markets. The Dow, I've actually been looking at shorting as well. If things are starting to turn over here, again, a delightful drawing here to demonstrate my analysis. So as you can see on the weekly chart from February 26, we should have been looking at shorts. Pretty spot on. What I need, though, for these moving averages to start facing downwards, I need the price to come back into this trend line to give me a better risk reward setup. Yeah, so I'm hoping it doesn't just continue to crash down through here. But if it does, I'm probably not getting into that. If it does come back here, then yeah, I'll probably have a stab at shorting the Dow. Can't bother to look at the DAX. Nat gas, is in the same boat as Brent. I haven't got the Brent chart here. I've just got US oil, but it's bizarrely reflecting almost exactly what Brent is doing, even though they are quite different and also not affected by the same things. So the US already has its own oil supplies, WTI, and Brent, which is what supplies most of Asia and Europe, is what is affected by this closure or this mining of the Strait of Hormuz. So I don't know why WTI is reacting in the same way, but there we are. Someone cleverer than me and more understanding of the economy can hopefully enlighten us in the comments. Gold had a little drop at the beginning of the month, but it seems to have stabilized a bit now. There's a lot of things that, this 50 MA that it's coming into now has been historically a very good level of support for it. So let's see if it is again. If it does break this 50, then we definitely should be targeting the 100. Silver, it's sort of forming a bit more of a wedge. I would imagine it will continue to do that and come down towards 71. And when it meets the 100 MA here, hopefully we'll start to come back through and come up. I am looking to start getting long on silver once that happens. Short term, you could be looking at shorting silver for the next few days, I guess, if you're an intraday trader. I've not really been looking at Bitcoin much. Let's look at the weekly charts just for a bit of a clearer idea of what's going on. Yeah, it's just been tanking. I think that, this is a great area to buy Bitcoin if you are going to buy it. There's a lot of support found here. It's certainly a key level. If it crashes through the 200 MA, then I would get the heck out of Dodge because that's pretty much there's nothing there to stop it after that until like 16,000, which is a hell of a drop. So just be careful there. Obviously, none of this is financial advice. This is all my own opinion. This is all my own analysis. And you definitely shouldn't take any trades based off anything that I've said. It's not intended for that reason. It's really just to display how I'm taking my trades in my Darwin. Hopefully, it's given you some interesting insight into how a swing trader sort of plans the week ahead and looks at the markets in the currencies world. So if you want to see more about my system, check out the coaching videos on Charlie Burton Trading Channel, and stay subscribed on my channel. So hit the like button if this has been useful to you. Let me know in the comments if you're trading any of these pairs, whether you're long, you're short, what your rationale is, what you think of mine. Try not to be too mean. And yeah, hit the like button. Don't forget to subscribe to the channel. And I will catch you in the next video. And happy trading, guys. Have a good week ahead. Cheers. Bye.